live? Am I live? I have to test this because yesterday I charted INJ and I wasn't recording, so it was really quite annoying. So I did a lot of work on it and it didn't record. So I'm just going to go into my phone now and see if I am actually streaming, because I can't be bothered to do it again. Not that I don't mind doing it again, but I mean I'd want to do it again next week, not like after I've done it at the same time. Oh my god, I don't think it's live. Wait, let me see. Oh yeah, it is. Look, there it is. Oh, there it is. Perfect. Let me see if the volume's coming through. Yeah. Looks good. Looks great. So what I'm going to do is, so yesterday I did INJ and I'm just going to delete all my drawings. I'm just going to go through it one more time as though it's a completely fresh chart, and I'm just going to explain what I'm seeing, and then hopefully, you know, whoever's watching, maybe no one, will get some ideas. And I think David's not joining me today, which is a shame because he has a family and he's got to spend time with his family on the weekends for sure. So I'm not going to be able to get him asking me questions, which sucks. But maybe he's going to watch this afterwards. I don't know. Maybe he's not. Maybe he's just tired and bored of me. Alright, let's have a look. So usually what I do is I start looking at the highest time frame just to get the biggest picture. And so you see it launched in 2020, pushed up, made an all-time high in 21, corrected last year, and since this year it's just pushed up, and so we're above the all-time high there. So the all-time high is a really important level. These highs and these lows, they're very important, and you have to mark them out. And basically what you want with these highs and lows, you want them to flip. So I always mark them out. I mean, you could do the same with the low, but I mean the price isn't going down there anymore. But I mean, in theory, if the price did go down, that would also be a flip. That's the idea. As soon as you leave it, you back test it and you continue. This is kind of what we would want on the highest time frame for an ultra high time frame continuation. I don't know, like look at this chart. It's the beginning. If you think about this over a 20-year period, we've only just begun, and obviously the assumption is that this asset will last the length of time. So in the highest time frame scale of things, this is a very important level. It's the first all-time high. It's the first time this all-time high has been breached. Looking at the 6-month candles, I like to look at the candles without any distraction of any indicators, because from my experience and perspective, the candles tell you everything you need to know about everything else. It reflects all the information. You just have to pay attention to what they're trying to tell you, because it reflects the market psychology, it reflects the volume, it reflects everything. And even though there's a lot, you know, people struggle with pattern trading, it isn't just patterns in itself, it's also looking at the candles and what they're trying to tell you, because then when the candles do certain things, they form patterns, then the pattern will confirm what the candles are actually saying. It's the same with the time scales. So usually when you look at the time scales, the 6th month is telling you what they tell you the same story. They're giving you the same story. So when you see this candle, this like an inverse hammer, That's what it is. And it's an inverse hammer. It's into the lows. You break it down into 3 months. What is that inverse? So here it is. Look, it's 2 inverse hammers. Yeah. That one inverse hammer is actually 2 inverse hammers. They're saying the same thing. Exactly the same thing. They're both bullish ideas. 2 inverse hammers, one green, one red, is the same idea as this green inverse hammer on the higher time frame. What is that idea? It's a bullish reversal. That's the idea. And so when you start seeing these candles, and then you break down the candles, you start seeing patterns. That's what this is. This is a pattern. You have a green and a red inverse hammer into the lows, and then you break that down. If you break that all down, you know, you start seeing another pattern. All of this is reflected into candles. This is the pattern. The pattern is, you can see it's like a double bottom. You've got a reversal. You've got this expansion candle into the lows. That's the first hammer. You have the second hammer, and then you have a breakout. And this whole structure, this whole pattern, is reflected in the higher time frame. And that's, you can see that after you look at this a lot, you begin to see these things. Alright, anyway, that was just a quick lesson. Let me have a look. What I like to do is I like to take these highest time frame levels first, and you draw out these levels. And so let me show you. So that is a monthly level. I can mark that out. So I've got these templates which are color coded just to make it easier to see. So a monthly level is basically where you have a green candle followed by a red candle, like that, in a kind of where the price turns around, so that you see how the price goes up and it turns around. That level there becomes a monthly level. You see this a lot. You can see here there's another monthly level. See that? That's another monthly level. There's another one. This is another one on the reverse side. So what you can do is you can mark these out, and you get levels. And basically what these levels are key areas of orders, where orders are placed. So when you want to set a limit order, that's where you'll put it. So if you want to put a limit order to sell, so as the price is going down like this, you're creating these monthly levels. And when you want to sell, you put your orders at the monthly levels. And so as the price comes up, it's a good place to sell. Here, here, and here. Obviously the price is just taking all of that liquidity without a problem, but it's not the point. The point is that is the area of interest. And you can mark those out all the way through. And usually these monthly levels, when you break them, they come back to test. There's always like a back test, usually. And so it gives you an idea of areas to reaccumulate or to go back in, to get back in, if you get a good back test confirmation that level has now flipped from an area to sell to an area to buy. Let me have a look. So you see there's one there. Now the other thing to note is usually these levels are good when they're not touched, when they're untouched. And when they're touched, when the price goes through it or taps it, trades through it, then it becomes, it's called it's called tapped or touched or washed or whatever, you know, people have different terminologies for it. when it's washed or tapped or touched or whatever, then it's not as effective as it was the first time, the untouched or the untapped. Or some people will say it's naked. It's like a naked level. I'll give you an example. So you see down here, if you can imagine the price over here, the price is going up, and now you've got this monthly level here which you can mark out, and 4 months in, look at the price, it's at $2.4. You're thinking, how am I going to buy this asset? Am I just going to buy it at $2.4? The answer is no, you're not. You're going to place orders. Where are you going to place orders? Well, you start at this monthly level. It's your order block. And actually, this candle here, this monthly reversal candle where it reversed, you could buy that whole candle from top to bottom. Usually what people do is they'll place their orders from the top to let me make this white so it's not confusing. No, just leave it like that, that's fine. They put it at the top, they put it at the top of the base, they'll put it at the bottom of the base, they'll put it halfway in the body, and they put it at the bottom of the wick. Like 5 places you can put your orders. You just spread it out across that whole candle, and eventually what happens is you'll get filled. So the price will come down and it'll fill. You might not get a fully filled position, but you'll get some action. You know, you'll get some of your orders filled. That's the way it's done. So imagine if this, if you wanted to enter this for a long down here. So you have you place your order right here on the base at $1.23. You just wait. Now you might think, oh my god, it's come down, but it hasn't taken my order. What's happening here? This is what's happening. Like I said, it's come in, people have placed their orders at the top of this wick. See that? It's come down and it's triggered their orders at the top of this wick. It's triggered their orders at the top of the body, but it's missed the 50% and it's missed the bottom of the body, right? Don't worry about that. That's why you spread your orders on these order. Let's call it an order block. The next candle, look at that. See that? It comes in, hits the monthly level. The month closes above that level. See the close of that candle is above that level, and that's kind of what you want to see. That's like a hold. It's like held that level. The next month is the confirmation, but actually what happens is it just gets brought back up, and that's how you would enter it. So actually now this level is tapped. It's a tapped level. So you can almost, it's not as relevant. That being said, you've just created a new one. So even though that level's not relevant, you've got a new one at almost exactly the same position. So these levels, as they go up, often what you find is the price will go through them, and then you might come back to test them, like you have here. And this actually hasn't been able to get back to the level, and that's a sign of bullishness. That's a bullish sign when it can't get back to the level. When it's front run, it just means there's a lot of orders front running a level, which means there's a lot of demand. So anyway, so you draw these levels out. All of these are irrelevant now because they've been tapped. Look, you can see here it goes over, comes back, test, continuation. We haven't actually had a back test of this. We've had a back test of this level on the next candle. It's not adequate. You want something better than that. And this has just gone straight through these two levels. So these are quite important to see if what happens when the price comes back. We'll keep that one there. We'll keep them, and what I'll do is then what you do is you go to the weekly chart, you start marking out your weekly levels, so the higher time frame is more pertinent, is more important, but you can, the weekly is quite a good high time frame too, so you do the weekly as well. It's exactly the same idea. So you start at the base, you see this is a weekly level here, red candle, white candle, or green candle, and then you make your mark. Actually, oh God, what I do with the weekly levels is I make them yellow. Actually, these ones I haven't marked them. Let me just, I usually mark them so that it says monthly, so I know what level I'm looking at. And it's good to do this. It's good practice to have your levels marked like this, because then you don't get confused as to what's what. You can look at it and you understand exactly what you're looking at. Right. So here you've got a weekly level down there. Well, usually when you get like two levels like this at the same place, you don't need to put both of them because it's pointless. You have basically here you have a weekly level and the monthly level at exactly the same place. If at any point in the future the price of this token was to come all the way down to 1.277, you would buy that, you'd go all in, because it's such a strong level. You'd look really bearish, you'd like, what the hell, the price has come all the way down, but you wouldn't necessarily buy it to hold. You'd buy it and you'd take profit on the bounce. You know, you wouldn't necessarily buy it and hold it and hope for the moon when the price is down there. But anyway, the point is that when you have these levels of confluence with multiple levels at the same place, they're more powerful. So we have don't know why I deleted that. So we have, let's see, that's a weekly there, and I'll explain why. So initially what happened was you created like a weekly level, the price came back to test it, and then it created a new one at the same place. I like the ones where the price turns. I'm not fond of the ones where it's just a continuation like that. I like it when the price is coming down and it turns. So you have a kind of, see the price is coming down and it turns. I prefer that. This one, I mean, even though that is a weekly level, and it could react, the price could react to that, and you're definitely going to get orders placed on that red candle. I'm not fond of that. You have the same thing here. And the same thing here. See that? So what you have, the price is coming down and turns. Okay, so coming down and it turns. That's what you want to see. And then you can create a level off the base of those bodies where it turns from red to green. And these are levels now. So you can mark them out. On the way up, it's from green to red, you know, so, but we've cleared all of these levels. We're in price discovery. All of the levels that's been created on the way down have been cleared, and so I'm not going to mark all these levels because they've all been washed. I'll keep an eye on these monthly ones because I can clearly see that they're in the past, these monthly levels have formed SR flips. See, that's an SR flip. That's, I'll show you. See, it's an SR flip, and here it's gone on and flipped. So I'm kind of expecting similar behavior, that if the price comes back to one of these cleared levels, it could SR flip. So it's still an area of interest because it's done it in the past where the price has come all the way back to one of these cleared levels, these monthly levels, and it's flipped. So it's still an area of interest, but on the weekly time frame you don't need to do that. You're only interested in levels which are untapped, because now Where do you want to place orders? Well, you want to place your orders, your limit orders, at these levels. These are the first areas of interest. Well, this one, not these ones, because these are the wash ones, but these are key. These untapped weekly levels. There's a lot of liquidity here. If for some reason the price of this asset, this token crashes, you're going to find a lot of liquidity here that's going to hold the price. A lot of orders, because they're untapped levels. Do the same thing with the daily. I'm not really focused on the daily because I'm looking at higher time frame analysis. But if you're like doing intraday or like short time frame trading, then you might be looking at the dailies too. You might be, if you want to scalp, you'd be looking at this and going, where can I enter? Well, then you would look at dailies and you go, where are the dailies? Well, you've got one down here. Again, you mark it out, different color. So yeah, what else? Yeah, I mean, look, there's one there. See, the price comes down and it turns. I don't like this one where the price is going up. You can still trade it, but I don't like it because the price is going up. It's not really a level. This is a level where the price turns, and so you saw the same thing happen here. See, that was a level. See, the price comes down and it turns. So as the price comes back into it, see all that, the liquidity is taken and it holds that level and it goes up. So if you can imagine, if I bring it over here so you can't see those candles, you can imagine you're here and you're like, oh, I want to buy this asset, I want to buy this token, I don't know where to enter. Well, you've just formed a daily level right there. So that's the first place that you would enter. So when the price comes in, look what happens. It holds and it goes up. And that's exactly what that's why these are good. Right, I think that's that. See, like, I mean, technically you could argue, people would like say that's a level there, but I don't like that because firstly, today's daily candle hasn't formed yet, so you have to wait until the candles close. And then secondly, yes, it's not where the price is turning, it's like a continuation. So you'll get caught out by these levels. You could probably scalp something, but you'll get caught out. So you just got to be careful when you do this. Alright, there's probably more down here, but I haven't bothered to. Let me do C. Yeah, look. I'm going to copy these for control, so I don't need to template them. See that? There's one there. See the price? The price comes down again. Comes down, red, green, and goes up. So the base there is your level. You have the same thing here as well. The same thing here, but you've already got a weekly level, so you don't need to mark it. And what you do, is you on trading view, take all of these horizontal rays that you've marked out and chuck them into a folder. Just call it high time frame levels, and just hide them. So you've got it there. You can bring them up whenever you want. Like that. Right. Next thing you might do, I think, is it's called a volume pool. Use this. It's called fixed range volume pool. It's one of these things on TradingView, and basically it tells you, the way it works is you click it and then you select the from and then the to, the range, and then it will tell you. So I've taken it from the beginning of this token all the way to the current price. And what it tells you is it tells you where the value area, this is called the value area. So from between the bottom of this blue line to this top blue line, it's called the value area. Basically what it's saying is that the price is usually within this area, like 70% of the time. You can actually change the settings. So, oh, this is on 68. No, 70 actually, my template. Oh, 70. Yeah. So yeah, it's 70. The row size just tells you how big these row sizes are, and then it tells you that 70% of the time where the volume is. If you want to, you can change that. I know with chart champions they use 68. It changes it slightly, the size of it slightly. They like to front run things, or they like a deeper entry. So, but most people will just use the default, which is 70. So I just like to see what most people are looking at. It'll give you a slightly different level. So this is 70, and this is 68. You see there's a difference, a slight difference. You may prefer 68. It's all subjective. I just like to go default because I want to see what everyone is seeing. I like to see what everyone is seeing. I can make the bias myself. I don't need something to make the bias for me. So anyway, so you've got this blue line which is called the value area high. You've got this bottom line which is called the value area low. You've got this midline, this red line called the point of control. Effectively what it's saying is that most of the volume was at this price in the middle, this red line. So most of the price has been traded at $1.706. Most of the volume is at this level. Most of the action is at that price. Most of the interest for this price, for this asset, is at that price. So logic suggests that if for some reason in the future this came down, you're going to get a reaction, because that's where most of the interest is, that's where most of the volume is. Yeah, that's what this is for. The value area high and the value area low, that basically tells you the range, the extent of the range. As long as you're within the value area, you're locked within this range. And it's when you leave, then you're no longer in this range. And then what happens is that over time, as volume comes in, the value area changes. The point of control changes, the value area high changes. You'll see it slowly change over time, depending on how much volume comes in. So if, for example, suddenly there's a massive amount of volume coming in at this price, what you'll suddenly start to see is this value area will start getting bigger, and this value area low will start pushing up. That's what happens. So anyway, what you would do is you'd mark out these levels. Not that it's going to come back tomorrow, but it's good to have these levels marked out. Okay, and it's so low, I don't even know why you would bother. I like to mark them out because I like to see if they've moved. But you're not necessarily marking out because you think it's ever going to come back to this price. I just want to see if it's moved. So you mark them out as close as possible. See? And then you can just delete that now, and you have these levels, you know. And then what you would do with these levels, you'd call them something as well. You'd put them in their own little group. Rename them volume, higher time frame, volume levels, whatever. You can call these whatever. There's no right way of doing this. It's all subjective. Labeling things. There's no right or wrong way. Just do whatever you feel is right for you. So you see, that's the range, the whole range. And something else you can do with these volume pools is you can break the range up into other ranges, like sections. So I'll give you an example. Let me hide that. Go on a higher time frame. I like doing it on the 3-day chart and seeing what's going on. So I'll show you. So you see what happens with the price is it's easy to see up here, so let me just do it up here first so you can see. What happens up here is that I'll do it on the daily chart. See, as it leaves this little consolidation area here, it moves up into a new range. You can see how the price goes up here and then it comes back and it back tests here and it just back tests all of this area, and then it loses it and it back tests it, and now it's underneath the range. See that? So right here we're underneath, and above this line that I've just created we're above. So what you could say is that this whole thing up here is a range on its own. What you would do with this range pool is the candle that entered the range. So you see this is the candle that on the daily chart, this is the candle that entered the range. If the wick is the key area, is the dividing line, the top of that wick, this candle took you into the range. You take it from that candle to the candle that leaves the range. So which one of these candles leave the range? Well, this red one here. So you can do volume pools on ranges within different ranges, different areas, and you'd break it down. So you'd say, well, that's one range. We've now left that range. We've left it with this candle. We left that range. See, it left the value area low. And what's interesting is you see how it leaves the value area low on the daily time frame. See that? It's left it. And now it can't get back in. You can't get a daily close back in. Can't get back in to that range. It can't get back in. It's rejected on two distinct occasions before it crashes. The price crashes. Effectively, you've left that range. You're in a new range, and then look. You've lost that range until you get back into the range, the previous range. You see, that's what happens over here. So what you can do is you do exactly the same thing. You've left that range, you're in a new range. So the candle that takes you into the range until the candle that takes you out of the range, which is that white candle there. Now, this lower range is much lower. In between, you're just in like some kind of no man's land, like a dead zone, where it's not really ranging. It's like stuck between two ranges. But most of the time, like 80% of the time, the price is in the range, in some kind of range bound structure. And here you can see that it deviates a couple of times from this range. Eventually, when it gets back above the value area high, it flips that level, that value area high of this intermediate range, it flips it into support before it moves up. So it's quite useful, these are quite useful. it's a quite useful tool if you can identify the ranges correctly. Is very useful. And then sometimes what you can do is you can do it like on extensions, like from bottom to top, and it's like you can imagine this whole move, for example, like from here all the way to that all-time high. You can say, well, I want to see where the volume is in that whole move up. I want to see the distribution of volume, because maybe coming back to this value area high on that move up would be a good place to enter, which it really was. When you look at it, it comes in, comes out. Eventually, what happened? If I can draw that out, see what happened. It kind of came in, came out, came in. The second time it came out, back tested, and then it went up. So it's very useful. Anyway, let me just draw these out quickly. What I like to do is I like to look at the highest time frame and see if I can break it up into bigger ranges, which you can see here. I'll show you. There, you see that? So what's happening here on the highest time frame, the weekly chart? You come up, back test, you're up, you're in this top range here. This whole thing is a range. The whole thing's a range, and then you lose it. You come up, back test it there, but actually you just break through and you just walk back into that higher range. So what you can do, get rid of these. You can do a volume pull on that candle through to that candle there. So, and then you have this lower range, which is from this candle all the way to when it leaves, which is there. And now we're in this kind of back in the upper range again. So from the candle that enters to the current position there. And you're basically saying that this red line that I've drawn is it's like an SR flip. I'll draw SR flip. I like to do SR flips in white. Do it white. Oh, give me a second, I'll be right back. I am back. So yeah, so let me just save that. I like to save these. Save as. So that's a range. That's the top range. There's the bottom range. This is now we're in this top range again. And then we can add that into its own little group. Rename range pools. Keep an eye on that. Okay, so looking at this, I need to do some Elliott waves on this as well, some counts. You know, one here. Zoom in a bit. Look at that crazy, that's like a crazy run from the beginning to the top. It's so hard, look at that, it's just like one bullish impulsive wave from the 3rd of November 20 all the way through to the 16th of February 21. It just went up like a rocket ship. That whole thing is impulsive, really. Look at that. Crap volume, look at that shit volume, all that shit volume. All the volume is actually coming in now. Let's see that. Look at that volume coming in now compared to the beginning. I don't like these things. I almost think that at the beginning, this, for me, this looks like manipulation, this whole move. It's like so unrealistic. It just makes no sense. It's like whoever was in didn't sell. The market was bullish. They slowly scaled out while the market was buying. That's when the volume comes, when they finally dump. And then obviously Bitcoin corrected, and then everything went south. And then this volume here is just people trying to exit because they're stuck. They got trapped. Bad position. But all of this volume is low. Just, I don't like any of that move up. It wasn't nice. Now the volume's coming in. Down here, it's a reaccumulation at these levels. It's not a bad sign actually, because when you have this kind of volume, I'm hypothesizing. Obviously I have no idea about this, the fundamentals of this token or whatever, who runs it. No idea who these people are. I just know that everyone's talking about it. I think what's happened is a lot of these investors made a crap load of money, and they've now just put it all back in this area. Started to accumulate, and now they're pumping it. I think this was a pump as well, but they didn't dump, they scaled out. I think they pumped it, but they scaled out, so it doesn't look like they didn't want it to crash. They wanted a long drawn out consolidation in the highs before it dumped. When you look at the volume, let me put the highest volume on, the 4-inch ball. Doesn't really tell you anything. Let me have a look at this one all the way up to the top. There's not much volume there. It's a low volume rise. A lot of volume in this range compared to the rise. It's like they all took profit while everyone was buying. Let me see. If we got where would you take the one? Is that the whole thing a wave one there? There. Like that. Go wave 1, 2, 3, 4, 5. Have a bigger 5. And you have some kind of unbelievably long correction. Maybe another one. I don't know. Shit, huh? it's shit. I would just ignore this stuff. The first rise. I think it. To me, it feels like this whole thing feels like manipulation. I don't. This is so unusual. There's no waves. It's just one long wave. If we just ignore this first part and just go to the current price action. Maybe this is more natural because you've got a lot of volume that's come in. You've got wave 1 starts there. 2. Yeah, we're in a 5 now actually. So the rule is that the 0 has to be a significant low, which it is. You have the first impulse, which we have. It's quite impulsive. Look at that. Then we have like an ABC correction, which we have, ABC. Then we have a 3, which is usually the most bullish. 1, 2, 3, 4, 5, that's right. Then we have another correction. I mean, this is quite a long, complicated correction, maybe a 5-wave correction, who knows, like, it's very bizarre, but whatever. Let's just say it went over to here. So now we're in a wave 5. 4 cannot come underneath the top of 1, which it hasn't. So basically, if this is the top of 1, your 4 cannot come down here. It's impossible. The rule, then it's no longer a Elliott wave. It's something else. And then your 3 cannot be the shortest. So it's not, because you've got 1 and then 3 is longer than the 1. If 3 is not the shortest, it does mean that 5 can be longer, which at the moment it is. At the moment 5 is the longest. So what does that say to me? That says that momentum's picking up and a lot of people are just jumping in. All of these people that are coming in the 5 are latecomers, but they're making a lot of money. Look, you could have, look at this bullish impulse here. Bullish impulse, you could have jumped in, just dive in. Sorry, got a phone call. It's so annoying when people call you. They just don't leave you alone. They can't text, they call. Does anyone else have that problem? Anyway, yeah, you could have just jumped in, like, and you would have made money. You jump in at $15, you're already 2x on your investment just by jumping in. But it's borderline gambling, you know, if you don't have a plan, if you don't know what's happening on the higher time frame. If this is, I don't really know what this is, but if this is a 1, somehow this is a 1, this whole thing is a 2, somehow. If somehow this is a 1, I can't draw it, but whatever. This whole thing is a 2, then we're in our 3 now. 4, 5. Now the way it works, let me change the color. The way it works is that each bullish impulse has 5 waves and each corrective wave has 3 waves, ABC. Or sometimes you get an ABCDE corrective, but whatever. So this whole wave, 5 wave here is wave 1. That's a wave 1 because it's the first wave of this. The whole thing, the highest time frame is a wave 3 potentially. You're assuming that this is a wave 1. I can't draw it out. I don't know, maybe other people can, but I can't figure it out. But let's just say that is this whole 2 is a corrective. It doesn't really matter because it's this we're in the bullish impulse. Whether this is a 3 or whether this is a 1 and this is just a nothing, yeah, it's irrelevant, because we're clearly in a bullish impulsive wave. We've just made 5 waves, which is wave 1 of this bullish impulsive wave. Yeah, so whether this is the highest time frame 1 or 3, it doesn't really matter. You're still expecting a 1, 2, 3, 4, 5, something like that. Somehow. Don't know how high it's going to get, don't know how long it's going to last. No one really knows. Yeah, but obviously you have certain rules, and one of those rules is that the 4 can't come underneath the top of the 1, the 3 can't be the shortest, and we are expecting all of this to be done and dusted by the Bitcoin bull run, the end of the Bitcoin bull run. For some reason I can't see it on this chart. Why can't I see it? Okay, there it is. So there, that's about right. End of September 25. That's where it kind of ends. That's where that's the climax. That's the theory, because obviously when Bitcoin dumps, everything's going to dump. If you have this crazy one, which we're experiencing now, usually the 3 is bigger than the 1, but because you have this really crazy one, I mean, look at the expansion so far to where we are now. We're already 30x up. That's crazy. That's a big run. I don't know if we're going to get, I mean, we have to see what the 3 is like. If the 3 is smaller than the 1, then the 5 has to be the smallest. Yeah, because we have a pretty big one. We don't know. Look, let's say the 1 ends now. If the 3 is smaller, you'd expect it to be smaller. Look how much it has to go to be bigger. You have to go above $500 to even match the size of this 1. So we have to see how big the 3 is. Yeah. If the 3 is smaller than the 1, the 5 has to be smaller than the 3. The 5 has to be the smallest. So this is going to give you an idea of your expectations in this move. Yeah, you can't have a crazy 5 if the 1 is crazy, is already the biggest. It's just not going to happen. It's just not how it works. There are rules. Just follow the rules. I didn't make them up, they just are there, and it's all mathematical. It's all to do with psychology and maths, and this is tried and tested in time. So that's the Elliott wave theory. I'll put that aside in this Elliott wave group. Apologies if this is taking long, but I'm trying to educate people as well, so everyone understands the why. It's really important that you understand why, and don't just say this is how it is. Well, I mean, I'm trying to explain, but sometimes you just have to accept how it is. Let me get this bull run line in as well, because the halving is at the end of April sometime. It doesn't really matter, like the last week of April. So these are the bull. This is the bull run. Alright, so we've got all of that down. What I like to do also is I like to see if I can draw some find some channels, or I've got this GAN fan which I like to have a look at here. And then what you can do is you can use like one of these lows as a pivot and try and match it to one of these highs. And so the way to do it is try all the pivots and see which lines match up the best. Yeah, so you want to try to take it from this pivot to the high. It's not 100%. It's not like you're not expecting 100% accuracy. It's a guide. this kind of work. Look at this. Like just from that low there to this all-time high in the first instance, May 21. You could have drawn this. You could just pull this Gann fan out, right? Anyone could have done this. Just pull it right from there to the all-time high there. And look what happens. Just without even having all these candles printed, look at this. Look at that. It clearly holds there until it breaks. So you have to always take profit. You're not hoping for the moon. You have to take profit. Make sure your trades are risk-free. As soon as it breaks under, look at it. It backtests, backtests, backtests. Little resistance, but you do get a nice backtest there. This, just the whole thing gets front run on some other invisible line, which we have no idea. But you do get a front run of this backtest here, and then here, obviously, the further away you get from this price action, the less accurate it is. But it does kind of, you can see it does kind of respect it. See that? Bounce, bounce, through, over, backtest, and over. These Ganns are pretty good, and basically they tell you, they're giving you about the speed and the exhaustion of the price. Over time, the price slows down. You see how it slows down. It goes up really fast, and now it's slowing down, and then it drops and it drops and it slows down. So now we're going back. What you can do, we have an idea about this fan. We know it kind of works. That was right from the lowest of the low. You can also take it from this low here, like any significant pivot, and see how that corresponds as well. And what you're trying to do is you're trying to see if you can find something that corresponds nicely. See if that can help us with. See, that's pretty nice. Look at this. From this low here to that pivot there, we've come into it. I mean, these are areas, aren't they? Failed, back test down, comes up, doesn't get through, front run almost, and then we're through. So that's quite nice. So we know we're above that line. So a key indication for a reversal, in my mind, based on this Gann, is losing that line, is losing that line, and just, you know, something like that. If that was to happen, well, you've lost that line. That line's quite important. Look, you can see it's quite important. Let's see if there's anything else. That one. Try this pivot actually. See this one, I mean, if this was correct, see how it plays out. That pivot to that pivot. Kind of come. This is the 3-day chart as well. Let me have a look at the daily chart and make it a bit more accurate. Get it a bit more accurate. Pull it to that pivot. Kind of coming into that. Is it correct? I don't know. I don't really like this one. Actually, I don't really like it. Don't really like this. I kind of prefer him from this low here. try that. Either that one or maybe this one here. I like this one. You zoom in, you can see how the price moves. Kind of, it does kind of follow it, look. See that? It kind of goes up and it kind of uses that line as some kind of invisible frontier. See? Same thing here, and then the same thing here. It's like this invisible line that actually, for some reason, the price struggles when it gets to it, and it comes back and it back tests it, lose it, back test, and when you're above it, it's off to the races. I mean, that was a really good, like if we had this line up, if I was, I don't follow INJ, I'm just doing it now because the whole market is going a bit berserk. You have this, someone was following this scan and they were looking for an entry on a reclaim of this red line. I mean, look, they would have easily entered at $8 and the price just went crazy. Look, just on this scan, if you were looking for a reclaim of this red line, you're already up 2x, almost 2.5x. So it's pretty good to look at. So I think this purple line is a key level of interest, just because I think right now, based on what I'm seeing, there is respect on this scan fan. So I wouldn't ignore it. We keep that aside. All right. See if there's any channels as well. What's this? Let's try that. No, the other way actually. The thing is, we've passed the price. That's not going to help us. Sorry, let's do something else. Let me see. Hold on, let me just zoom in and zoom out a little bit. Could it come up to that midpoint and pay attention and stop? Yeah, sure, could do that, but it doesn't mean it's because of this channel. Could be something else. Oh, that's nice. That's much nicer. Look at that. That is much nicer. Look at that. Almost. This is beautiful. And then look, the midpoint tapped. Bounce through, back test. You could argue that's a tap, a touch. It's like a front run. I don't mind that actually. That's not bad. What you can do with these channels is you can clone them. Let's see if they really do apply. Well, this kind of does. Look, the midpoint. That's not great, but this is all right. If this does start to form resistance and it creates some kind of pattern, you know, like this, under over a back test, like if it suddenly did that and it came on and it did that, then yeah, sure, you can use it and you can target the top of the channel, you know. Or if it did that and it's couldn't get up, then yeah, you could target the bottom of this channel, you know. These are good for target. You can't really trade with these. It's just added confirmation of targets and places of entry. So I don't mind this actually. I mean, this could be the bull market channel. I mean, this could just continue up this channel. Look, you've got these lows. It's touched nicely. 1 2 1 2. If the price came back into that trend line, I would buy. That's a buy. Third time. 1 2, third time. I would totally buy that. Add that with some kind of SR flip. One thing's for sure though, because of this EW thing that I've got, there is no way that I would buy where we are now. Even though that there's probably more, it could go further. This is like the wave 5. 1 2 3 4 5. Why would you buy the top of a wave 5 on an already extended wave 1? It's madness. There's literally, you'd be looking to short. You'd not be looking to long this. If you don't want to short, fine, but don't long it. Wait for some kind of consolidation or pullback. That's what I would do. That's what I'll be looking to do. So let's just say this 2 comes back and tests this. Oh, that would be nicer if it came back somewhere. Where's my bull run timings? All right, yeah, look at that. Imagine if it came and just did this there. If this went higher, so what you can do for other targets, I'll show you. Do a Fibonacci extensions. They're very good. Or there's 2. There's the retracement extension or the trend-based extension, or the extension of the trend-based extension. So I'll start with just a normal extension. You just take it from high to low. And then I have an extension here. Now I'm using the log. Look, I'm using the log scale. I recommend everyone just use log scale. Just forget about price scale. I think it's shit. It makes no sense. With these like exponential assets, you're using log. Even Bitcoin, I don't even use price scale. I use log scale. I think all the noobs use price, and I think all the pros use log. So just use log and get used to it. So this is an extension. Remember, with this Fibonacci, you have to, if you're using log scale, you have to do the fib levels based on log scale. You can't. If you do it based on price scale, it's going to look different. That's from the top to the bottom. You have an extension now. You have your targets. Okay, the price on this run, we're already 1 to 1. Yeah, you see back from there down to here, back to there as a 1 to 1. So, and these are the extension. 59.91 and one at the very highest, I would say 173. If this was to continue, I wouldn't expect it to go further than, in my mind, I wouldn't really expect it to go further than these, than these 2 levels. But you know, at the craziest level, price would probably be 173. Who knows? And then if you do a trend-based extension as well. So how would you do that? I'll show you. We go from the low to the high to the low. Low to the high to the low. So that's your 1 to 1 there. See it formed resistance. 2 to 1 formed resistance. 3 to 1. We've just walked through it, and look, it's at the all-time high. See that? So it's quite amazing how these kind of add up. They all match with previous levels, and the 4 is up there at 66. I don't really like how it's just walked through this line. I think that's ridiculous. But anyway, think it's just greed now, actually. Right. So what you can do is once you have everything, just open it all up, just put it all up, just chuck it all on. Actually, not the range pulls. Bring these up. And then if you want to, let me get rid of the EW actually. If you want to go long, where do most of the lines meet? That's the way to do it. And look, it's right there. That would be amazing. You could long that all the way down to 7, where all the, most of the lines are there. Realistically though, let's just be realistic. I mean, could it come back there? Sure. And you would definitely, this is like the best entry ever. Look at that. You've got the value area high, you've got daily level, weekly level. Cool that. If it was to come back there, you would definitely look for a long. If you do, I mean, if the other thing you can do is you can't do it right now. Just get rid of these now because it's all. Eventually, when we do make a high here, when it pivots like an all-time high, eventually you'd obviously draw a Fibonacci pull from this all-time, not this all-time low, that's the all-time low, but from this low here, wherever it is. Okay. There's lag. Full fib log. The fuck? There you go. It's lagging. I mean, who knows how far this is going to get. Let's just say it gets up to one of these extensions. Let's say it gets up to this 4 to 1 to 4, right in the TR pocket. This is a TR pocket, that's what it's called, between the 1.272 and the 1. That's where the price is usually going to turn. If it's extremely bullish, it will push up to the 1.618. Let's just for the sake of argument, it gets up to this $66 in this run. So it's another, still got a ways to go. And then what you would do is you would draw your fib retracement, and that's kind of where you would be. That's your best entry, would be down here in the 618 region. But it may not get there. I mean, if there's a lot of people looking to buy this, you may get some sort of back test here, right? That's your first point of resistance, support, the 236, which matches up with the previous all-time high. And if this was to continue there, then this previous all-time high could be where it finds support, the first, because it's the first significant fib line. If you line that up with this parallel channel that we've drawn, this Gann fan, and obviously the bull run timings, I mean, you'd expect coming into the halving that everything's going to start moving upwards, because that's when Bitcoin halves, and that's where everyone stops selling and everyone starts just buying Bitcoin, right? And then all the altcoins will go up too. They might not go up as fast as Bitcoin, but they're going to go up. So if we were now to go up, continue going up somehow up to there, to that midpoint, like it doesn't really matter, in a straight line or whatever, you could potentially come all the way down somehow here to go back up. You've got a good like level of confidence. You've got the bottom of this channel. I think this channel I would be looking to long. That's coming back to the 0236. It's like the most bullish scenario. And let me hide it now because we know where it is. I mean, that's assuming the fib extension, if it went up, if it continued going up. And don't forget, for it to continue going up to $66, you still have to get through this scan. Yeah. You kind of like, you have to see what happens, because I do like this channel that I've created, at the very least the bottom, this trend line. I do like that. I don't really want to see us lose that for the remainder of this bull market. If we don't lose the bottom of this channel, get rid of the GAN. If we don't lose this bottom of this channel for the remainder of the bull market, it doesn't matter how many times it hits, can hit as many times as possible. Then we're looking at like a $600 token by the end, potentially. Just if we finally lose it. But usually with these like trend lines, or what normally happens is like third time it will hit, and the fourth time it breaks. But you never know. I mean, it could just continue doing that. Then it kind of, who knows? Who knows what's going to happen? So maybe what you would want to see is how far this corrects by the beginning of the bull market. And you want to see how this reacts. If you want to short this, I think you're looking for higher. And then in my mind, what I would like to see, if I wanted to short this, and I would want to short this actually, I'm thinking about it, but I think it has to go higher. I want to see something like this. So if you look back in history on the weekly time frame, you've got this kind of pattern. You've got like this push up, and then this kind of like this red doji. This one took the liquidity, this red doji. This one didn't take the liquidity, but the next candle took the liquidity. So in both circumstances, the liquidity was taken before it dropped. All right. You have something similar here. You had this this doji actually took the liquidity. So I do want to see the liquidity taken before I see a reversal, and that is on the weekly time frame now. It's done it once here. It's done it again. These are the two times where it reverses, 3 times, and then it drops. All right. It did it here as well, but that was a green candle, and it was at the beginning of the bull market. And that's the thing, we are at the beginning of the bull market, so it's very hard to. But if these are reversals, you know, here we're looking at reversals. So any significant reversal, the three reversals in the past I saw on the weekly time frame, it made a significant high, and then the liquidity was taken at least once. And so when you compare this candle now, it's a current weekly candle, this isn't how it ends. It's got to be something like this, like another push up. So the next week, could it be a doji? You know, that's what you're looking for. Maybe a weak doji, like a red doji, something like that. That's your first indication of weakness, like a red doji, like one of these red dojis. Yeah. even these red hammers are quite weak too. Like look, that's a, even though this is continuing up, you have the red hammer. The thing about this price action here is you have this level here, which is the top of this wick of this candle. It had, this is weakness. This red hammer is weakness. This is weak. This is weak too. But what happened was it couldn't close under, and it held. And then in this candle, it took the low, took the liquidity, and it shot up, closed above that high, and it just continued. Yeah, that was a really strong reversal candle. This green candle. So in terms of weakness, what we're looking for is like, look at this. This is a red doji too. Okay, fine. It didn't go down far, but it did go down. And look, the liquidity was taken there. It was taken and then it dropped. Yeah, people sold into that, and obviously it was bought back. Could happen again. But the first thing I think you're looking for in terms of reversal would be some kind of weekly doji, red doji in the highs. I think until I see that, I wouldn't even think about shorting this token. You zoom in onto the 3-day time frame. You're looking more at patterns rather than individual candles, right? And the way to look at it for a reversal, what you have is you have like these significant candles into the highs, like on the 3-day time frame. This is a just imagine none of this chart happened and we're here. You have this significant candle push up, all-time high, and you have a next candle. Look, that already is a reversal. Look at that candle. It's taken a liquidity. It's an inverse hammer into the highs. That's a reversal candle. So it drops. So they sold that. So that's the market sell. But what you actually have is this is the line to beat. This is the break line. So as long as you're closing candles above there, you're still good to go. That's the close. That's the first close, and then it drops. So based on candle theory, this first candle that pushes into the high, that defines the parameters of the range and failure to hold the range. And then ultimately this whole thing, the minute it closes underneath this candle base, it goes down. Now it doesn't mean it doesn't wick up and scare the shit out of people, because everyone thinks it's going to go to the moon. But actually all it is just, it's an opportunity for people to exit before it drops. Okay, now fine, it doesn't go far, it kind of gets brought back up. Ultimately it still goes down. But what you're looking for are reversals. You have the same thing here. I'll show you. This candle, white candle, green candle goes up. You have this kind of closes under. See, it closes back over, takes the liquidity, closes back under. That's game over. This might stop you out once, but actually the second time you win. Even though that looks, this white candle, this green candle looks like a reversal because it closes back over, it's actually weak, because if it was a strong reversal, it would close higher than the previous candle. If this was strong, it would close higher than that open. Should have closed higher. So actually people look at that and they go, oh wow, look, this is a bullish reversal. But they're wrong, because not only did it close lower, it also closed underneath this wick here. So it closed underneath resistance. And then you had one last push up, bullish. It was like a bull trap. And anyone who could see what the candles were saying would have sold into that rise, or at the very least they would have let it take the liquid. I was going to show you on that. That would be so messed up. They would have let it take the liquidity and then sold the swing failure. I don't even know where it is now. It's one of these. Sold the swing failure. I think it was that one. But you can zoom in on the lower time frame, and they're basically all the time frames it says the same. So in terms of longing, I think in terms of shorting, I'd be looking for on the weekly, very first thing I'd be looking for on the weekly time frame is some kind of red doji. I think until you start seeing that, I wouldn't necessarily think about shorting. I just wait, be patient, just wait for that to happen. Then you can zoom in and look for some kind of reversal on the lower time frame, and then what you might want to do is, if you're looking for reversal, what you're looking to do is you'd zoom in on the lower time frames and then look for like these, look for a pattern like this, like a head and shoulders pattern, which is actually what actually happens here. Even though you can trade the head and shoulders, it doesn't always work. It's like, well, what really is the confirmation is the market structure change. So you have like, that's what you're really looking for. You're looking for a change of market structure on the lowest time frame, because what you've got are higher high, higher low, higher high, higher low, higher high, higher low, higher high, and then you have a lower low, and then it's sold into, and it can't make a higher high, it goes to a lower high, and then the rest is history. So the minute you get this kind of like lower close, where that's closed lower, then you're looking to make a lower high. And then what happens is, if you draw a fib pool, let me put it on. Oh god, it was bearish. Huh? So bearish you couldn't get back to the golden pocket. That would be the entry, but it didn't get back to it. So it closed lower, and it was so bearish you couldn't get back to it. But that whole thing is a reversal pattern. See that big expansion candle? It looks bullish. Red doji. Oh, the minute it closes like that, it's just market sold into. Bam, just dumped. And the rest is history. It's a whole reversal pattern. There's nothing bullish about this pattern. The volume on that green candle, these green candles were reversed. Effectively what's happening here is that you have a lot of volume in this green doji for continuation. As soon as the price closes here, every one of these longs are underwater and they dump. They just exit because they're underwater. They're trapped longs, and they're trading for a higher high. I mean, basically, they didn't want this to be a lower high. They want this to not be the higher low. They want this to be the higher low, and they're aiming for continuation. They want to basically get higher than there to make a higher high. But what happened was it was sold into, and it ended up being a higher low. As soon as you had a confirmation, which was another low, it's a lower low, everyone was just dumping this, dump, just sold into. That's how you know. You know that there's a change as soon as you have a market structure change. I'm trying to go backwards. Should just delete them. There we go. So if you're looking at the current price action now, let's have a look. We got high low, high high, high low, high high. Oh, that's a, so that's not, see this, when you see something like that, you think, okay, what's that? Is that a lower low? Well, yeah, that's a low low, but then it made a higher high. So actually, this wasn't the high low. That wasn't the higher high. This was the higher low, and this is the higher high. So we haven't made a, see, look, so we've, so now that's the higher low, because you've made a higher high there. That's your high high. That's your high low. That's a lower low. This is a lower low. I still wouldn't short this until I saw a weekly reversal, but that's a lower low there. See that? So unless this goes up and makes a higher high now, what could happen is this could kind of go up, make a lower high, take out this low, and you've got a lower low, and then you've changed market structure. You're bearish now. But right now we're in a kind of indecisive point because we've made a lower low here. That's the higher low, that's the higher high, this is the lower low. If this makes a higher high now, then that's no longer the higher low, that's the higher low. So we're in a bit of an indecision place. If you wanted to short this now, I wouldn't, but if you're like, if you've got good risk management and you feel like it, then at the very least what you want to do is this. You look for a reaction on the golden pocket area, and then you have a good risk management. That's a reaction. I mean, what I can see right now, like there's a pattern forming, and it's it looks like a diamond. Looks a bit like this. And these diamonds are bearish when you're entering them like that. What you end up is something like that, and then it just kind of breaks. That's what I'm seeing right now. You're forming like a diamond in the highs. That's like a bearish pattern. The invalidation is easy because you don't expect to make a higher high. Just making lower highs. You're making higher lows until you get to the crux, and then it sells off. It breaks down. So you could either short. You have to take profits. The thing about this is a high risk trade because it's such a bullish. There's so much bullish momentum. You can't risk more than like a small amount, like a 1% whatever. Your stop would be above the previous high. You'd be looking for a reaction on the golden pocket. You'd be taking profit really quickly somewhere down here, and then the rest would be a risk-free trade. So if you get stopped out, you wouldn't take a loss on your trade. You're scalping, and then you might be right. And if you're right, then you'll fill all of this gap here. It'll come all the way down to this level here, down here. It'll be like a really nice, and then it'll be looking like a head and shoulders, you know, potentially. It's possible. Everything's possible. And then obviously you have an easy invalidation because you're definitely not looking to get above the all-time high. That's not part of the plan. But the thing about this is it could always go up and form a different kind of idea or pattern or something. If it goes up and makes a higher high, obviously this idea is invalidated. Let me just put it all into a little I like to group these up into short trade. Did I get all of that? Yeah. Short position. Short. This looks like a back test of this wick, but it looks like a front run. It's not a significant enough test. The problem with what I'm saying, with my idea of this kind of diamond idea, is I could be wrong. It could very easily take liquidity here, SFP, form a support here, back test this level here, this whole level. That will just be an SR flip for continuation. You could easily do that. And you could scalp the SFP there. You still have to do the same thing. You have to take profit really quickly because you're in the highs. You can't, you know, you're not expecting the moon right now. It's just stupid if you think this is going to go to the moon right now. This is a high risk trade. The other thing you can do for confirmation is draw a range pool. You see how this candle goes up above this wick? That's the range. That's where the range begins. See that? So you draw it from that candle, the one that goes into the range. Get rid of these. We're still in the range. We're still ranging. I wouldn't be surprised if we go up to the value area high. See that blue line? Value area high. You've got some volume gaps here as well. You see how these candles don't back test, they just fall down without any kind of back test. It creates gaps in volume. And so usually what happens is the price goes back to fill the gaps. So if it was to get back up to the bottom of this green wick, all of these gaps would have been filled. So I wouldn't be surprised if this does go up now, fill all of those gaps, find some resistance somewhere here and come back down. You can short that. I think that wouldn't be a bad short. You'd have to have your invalidation above there. The other thing you can do, if you want a much safer invalidation, like this is I don't hear this taught much or told much out there. What you can do is you can wait for the price to leave the value area and the fall come back into the value area. I mean, it did it here twice, so it would have stopped someone out the second time. But here, look, oh, actually I can't show you. Here it does it here, look, you see here? In the bottom here, see it leaves. As soon as it comes back in, you don't want the price to come back out. You don't want it to leave again. So you see the price comes out. As soon as it comes back in, you don't want the price to close outside of the value area again. The idea is that once you reclaim a level, that level is good. So in this sense, you could argue you can have the same idea. If you don't want such a big invalidation, which is all the way up to there, because the risk to reward here is relatively bad. Where did my trade go again? Shit, did I delete it? Go back. See if I find it again. There it is. The risk to reward is terrible. But I mean, this is only to take profit. I mean, the idea is there. That's the risk to reward. So you're risking 1% in this invalidation area. But what you could do, if you wanted to minimize your risk and maximize your reward, you do the same thing. You go up, let it go up. As soon as you lose it, short. And now your invalidation is here. Here. You're entering here. Not so much, because then you don't really expect it. Once it goes back into the value area after going above the value area, you don't expect it to now go like that. That would be incorrect. It could do that. That's why you have an invalidation, but you need the invalidation first. At the moment, if you were to short into the golden pocket, you have an invalidation. It's up there. But if you want a shorter invalidation, then you're waiting for it to do that, or just short and just have a bigger, wider invalidation, you know, and then you have a big range, and it's fine because you're still risking the same amount. It's just that this trade with a smaller invalidation has higher reward. It's a higher risk to reward, and it means that you can take profit here, and if you position correctly, you're making a lot of money already just on this small distance. And the thing about this is you have the point of control here. I mean, technically you have to take profit at the point of control because it could form support. It could price can always go here, form support, and then head right back up, stop everyone out and go down again. You can always do that. That's why it's good to have an invalidation a bit higher at the right at the top, because if it does do that, you don't get stopped out, but you still have to take profit. If you're not taking profit at these key support areas in the way of the price, then you're risking too much. I think you should take profit, and then if you want to, if it goes back up, and if you can compound the profit, you can add, improve your position, or what you can do, and this would be better. You could take profit at the point of control here, and if the price does just go through it, back test, you can short again with the amount that you took off. So at least you know that you've taken profit, so if it goes up and stops you out, you're still winning. So you can just wait for it to drop and then come back and then back test and then fall, and then you can add. So you're only losing a little bit, but then at least it's a safer play. And then obviously, if you want to be even more safer, let it just fall down and then back test there, and then you can add. And then you're still looking to trade all the way from the drop of this wick down to these lows. This could work. This is not bad. I don't mind this idea actually, even though I'm not a fan of a higher time frame short in the context of what I was telling you. Where is this one? Fixed range. Because I'm still like, I'm looking at this weekly chart. The other type of short you could do, which is also just as effective, is a swing failure of this previous all-time high. There's no reason for this previous all-time high to hold as support right now. It's already overextended. This whole rise, when you look at the volume on the weekly time frame, look at this. The price is going up, and then the volume is actually going down. See that? The volume is going down. Yeah, you have a little bit of injection of volume here. Here it makes sense because basically you've stopped everyone out here. That makes sense. But actually, this last bit of move, wait, then it goes from here to here. The volume's actually going down. It's decreasing volume. It's not increasing volume. I feel like there's some kind of bearishness here. And then if you have a look at these indicators, the indicators can give you confirmation of bearish divergences. Different people use different ones. I like to use the MACD and the CCI. It's just personal preference. There's nothing is better. It's just like the more you look at something and study something, you can become the best at that one thing. So it's always good to just focus on one or two and become a master of it. Yeah, they can all work for you if you become the master, you know. And then nothing is better. It's just if you become the best at that thing. That's all that really matters. I like to use these two, and I'm actually seeing some bearish divergences on this. Look, I'll show you. With the MACD, the price, you see here it's higher than here. Whereas here the price is higher than here. That's a bearish diversion. This is going up. This is going down. Very slight. And it's a higher time frame, so it's hard, it's not as accurate. If you take the recent activity, that would be more accurate. When I say recent activity, I mean this whole move up from here to here. Well, you see, this is all bearish, but it broke up. Because look, you've got higher high. That's not higher, but it's kind of at the same level, and these highs are getting lower. So there's a bearish divergence. But it was completely invalidated because we went up from there to there. The price broke up, made a higher high. That's correct. So these basically, the way it works with these patterns is this price action has to look the same. If it looks the same, then there's no divergence. So when it starts looking different, so you see this is going like this, this, and then this, but this is actually going this, it's kind of looking different. They look different. So that's a divergence. They look the same, then there's no divergence. Once they start looking differently, you can start seeing divergences. You can't trade them. It's just an idea of, it's just an indicator. It just gives you an idea of something not behaving the way it needs to be healthy. So this is clearly a divergence here. You see this high? We've just made a higher high. Here, this is the higher high. And look where that is. It's lower. So that's already telling me that there's another divergence, a bearish divergence. What it's saying is that the price is far above what it should be. And the other thing to bear in mind is we're above on the CCO we're above 200 now. We're in 230. That's overbought. Yeah, that's overbought. This is crazy overbought. Like 400 is crazy overbought. Obviously, if we go to the highest time frame, the monthly time frame, we're like at 306. That's like unbelievably over. That's overbought. You know, where you really want to buy is down here, not up here. But let's be realistic. In the context of a bull market, this could just just do that. For the whole bull market, just to stay up above 100. So with CCI, every 100 value is a resistance support flip, SR flip. So 0, 100, minus 100, 200, minus 200, 300, minus 200. They're all SR flips. So obviously it's not 100% accurate, but I can see some divergences there. On the daily chart, nothing. It's really higher time frame divergences. You just can't really trade it. It's just telling you that the price is overbought. Yeah, actually, look, this MACD is bullish. You see, and this is on the 1 hour chart. I'll show you. Yeah, price is going sideways. The MACD is going down. That's a bullish divergence. You see, we've made this, it's the same, like we're back in the low here on the MACD, but here we're in a higher position. That's bullish. So sometimes in the lower time frame they'll say one thing, on the highest time frame they'll say another. So you just have to bear it in mind. You can't trade it. It's just giving you an idea. On the lowest time frame, we're still bullish. We're still kind of bullish. Doesn't mean that my idea doesn't work and we crash. You know, I'm still seeing that diamond idea. I'm still seeing this diamond, and then just search for it. Just go onto Google and search for diamond pattern. Yeah. So that's the kind of short idea that I have in the lowest time frame. On the highest time frame, I don't like this, how it's overextended. I don't like it. I would, at the very least, for a long, if you want to long this, I would like to see a consolidation period, an extended consolidation period. And wherever it holds support, it doesn't really matter where it holds support. Yeah, it doesn't matter if it holds support down here, somewhere around here, or wherever. You just want it to hold support. You want it to backtest something and hold support. You want to see that happen. So probably the nearest higher time frame support on this token right now is here, probably here. Previous all-time high, SR flip. We have this lower channel. We have the bull market halving, the BTC halving. If we can get some kind of accumulation here, finally hits there, yeah, you can buy that. That's beautiful. Look at that. Why wouldn't you? You're buying a back-tested support into a trend line, a higher time frame trend line at the right time. Timing is important. If it did that, you would buy that. You know, but you wouldn't necessarily accumulate that. You'd just be looking for the entry. And in my mind, if it did something like that, there's two entries. I mean, you're basically looking for some kind of flag, aren't you? Effectively, you could either enter at the right time on some kind of SFP, or you just wait for it to break and you buy the back test to go up. That's what you would be looking to do. You wouldn't necessarily be accumulating up here hoping that it goes up. You're either trading the SFP, taking profit, making sure it's a risk-free trade, or you'd be entering on the break to go up at the right time. But I mean, I think ideally, I personally don't think I want to see this channel lost. I don't want to see it lost. I think if I saw this channel lost, if we backtest that SR flip, then we're looking at a short there. If you lose the all-time high, you're looking to short it. Most people were looking to short it. That might do well for the longs, because then if you've got a lot of people shorting this and it doesn't really go down, they could just get squeezed up, you know. So, and then if they get squeezed up, then there'll be a massive market buy at the highs. But I think if you were to somehow lose this channel, I would be looking for much lower then. I wouldn't necessarily be looking to buy anywhere here. I'd be more interested in buying much lower, somewhere here, this liquidity area, and then if you have that with kind of match it with this retracement just over here, just maybe that 50%, or even down into the golden pocket area. There's an SFP level here. Let me just draw it. Template, CC. Did I just mess that up? Template, CC log. It's much lower actually. But I mean, imagine if the price did crash down here, everyone would be crazy bearish again, and then like one of these lows, you were able to just SFP it, and it just V-shaped, and you'd enter the SFP. It'd be like all the way down to 6, and then you could take those SFPs, you know. But that's the only time that I would be thinking about longing this much lower down. It's either you long lower down, or you long the sign of strength. But I think right now, like, a sign of strength for me would be some kind of long-term sideways consolidation above this previous all-time high. That would be a sign of strength. So if we could get a consolidation all the way through to the end of March above this all-time high, I think that's a sign of strength. And that could be, I mean, look, this went up in like one big move, just like that. Maybe this is just going to go up this channel. You know, just like that. Who knows? Anyway, the other thing you can do with INJ, I'm not going to do it right now, but you'd have to look at the INJ Bitcoin chart and see what that's saying. I could have a look at it. Let me have a look quickly. Binance, huh? Was there some Binance? There's some Binance. Okay, I'll put Binance there. Binance. And pull out. I've got this little group of coins which Crypto Tony keeps on talking about. So I'm keeping I'm keeping an eye on them. Oh, I lost it there. Because if you don't follow Crypto Tony, he's not 100% correct, but Most of the things he says is correct. And then the other time he's just shilling his partnerships. But why not, you know? He's earned it. Look at that. The chart, the INJ chart on the USDT and BTC are pretty much the same. Oh, it's pretty much the same. Where is that? Daily, is that daily, 3 day? Let me look at interval, time, date. Go. Pretty much the same. Well, the volume is more on the USD. There's a little bit of divergence here. It's a little bit of divergence. I'll show you. It's not good. Divergences aren't always good. You kind of want the same thing being said. That gives you confidence. Divergences are deceptive because you're seeing one thing, but it's actually saying something completely different. All right. So the all-time high on the BTC chart was broken there. So it was actually broken on the 6th of November, whereas in the 6th of November we were still down here. It's not, so it didn't hit the all-time high at the same place. That's divergence already. That's telling you a different story. Now that we're above the BTC all-time high, we've shot up. Whereas now on the USDT chart, we're just above it. Right. So there's a bit of a divergence in the story here. They're saying the same thing in principle. If you look at the shape and the pattern, it's in principle it's the same, but now we're coming with two different narratives. And we have to try and deduce what that means. Is that bearish? Is that bullish? Is it going further? Is this going to the moon? I think fundamentally, this is really important. When you want to buy this, you want this, the BTC chart, to also be in support. Yeah, that's what you want. You want this to be in support. Like, look at this. This is what I was saying about consolidation above a previous high. Actually, it was the BTC chart that was more bullish than the USD chart. See the USD chart here. This whole area where we're consolidating. This is this area here. It's above this kind of previous high. Where we're here, the previous high is kind of in the middle. It's almost above it. This is the bullish chart. This is bullish because you're above a previous level. This is hard to tell. This SFP'd, but the reality was that it was above this level here. It came back. It's like an SR flip, just went up. This is saying the same thing, but it's not really. It's like, which level do you take? This is clear. Look, this happened there, but the level on the USD chart is there. See? There. So how do you know that? Where's the SR flip? You can see it on the BTC chart, but on the USD chart, you can't see it. It should have come back there. So the USD chart, I think, is a little bit overextended. That's what it feels like. I think the BTC chart is correct. The only other thing is that there's no real volume in the BTC chart. It's these like low volume. I don't know what that means either. It's hard. It's not easy. But in principle, they're saying the same thing, so that's good. In principle, the shape is the same. What you don't want is you don't want BTC chart to just do this while this is going up. That would be weird. You want them to be doing the same thing in principle. If we have a look there. Time frame. You see that? On the BTC, this is above the previous high. See that? It's above it now. So there's no divergences there, but on the USD, there are divergences in the higher time frame. Right, I do see something though. I see this higher time frame channel. Where would you take it from? Would you take it from there to there? I prefer the less steep one actually. Kind of. What do you think? I actually like that. What does it look like on the 3-day chart? Why would this just go there? It wouldn't. Look at that. So it's like a nice parallel channel. The midpoint has kind of been respected. I don't see any reason why this is just going to just go up and ignore it. Could it go up, tap it again, and then just come back down? And then I would want to long this when BTC is forming support here, and kind of almost ignore the USD chart. I think this is more important. The BTC is probably more important actually. So even though I've got this channel here on the USD chart, I think what I'm seeing here might be more important. Oh, I messed that up. If that's correct, look at that. Let me get rid of this for a second. Let me minimize it. Alright, so let me have a look at this. to there. I don't really like the midpoint. It's kind of there, but it's not. Could you take it higher? Really? So subjective, isn't it? Maybe to the all-time high. That's better, but it's way higher. I do like this bottom line though, this bottom channel. This was just like a deviation, a crazy V shape. Look at that crazy V shape. As soon as it was in, it was off. So I like that. This is, for me, this works because look, you lost the channel, and as soon as you get back into the channel, you expand really quickly. You come to back test it, and then it just continues and it tests it again. So you've got a really nice base. I would love to buy this at that level again. That would be really, if you could find an area where it comes and it connects at the right time, that would be a good place to buy, but you just have to be patient. I think the problem now is we're coming into this top part. Let me just change that colour to green. See it? And change this to red. See the different channels. Get rid of that rubbish. Yeah. Let me see what the volume's at as well. Much lower, much lower. I don't think I want this green line, this green trend line to be lost. That's really important. And okay, I think you want to see both of these charts to say the same thing. If you can catch this asset, this token at the right place on both of these charts, then you have a really safe entry. I think it'd be good for this to come back and back test this previous all-time high again somehow. Somehow if it came back. Don't know how it would get back. It wouldn't be like that. Maybe like back test, go up. Then it would have to break this red channel if it wanted to go higher. But I think in the short term, still going with my let me just lock these again. No, see what that's looking at. They look the same, huh? It's definitely looking like a diamond. The BTC is a little bit more droopy, but it's a lot more respected as well. See the this looks good. That's saying the same thing, but it's pierced it there. You see, well, it's pierced it there, but here it hasn't. Here it's like, this looks like the BTC one looks more respected. So keep these together. And then if you were to do a range pull on both of them for that short idea, yeah, the point of control is at the bottom. Usually when the point of control is at the bottom, it's actually more bullish. Obviously if you lose it, then you know, that's crazy resistance. Like you've got point of control and the value area at the same time. So it's a safer short. And obviously if you pull this, see what the Fibonacci is saying. I already did this, but just so a comparison. Yeah, that's nice to get a short up there. All right. I think that's it for me. I've got to go. I hope that was educational. I'll probably be looking at this again, and then if you have any questions, then feel free to ask. I'm pretty active, always online. Happy to help.